inflation and deflation is a very complex issue. As an example, if you print money, some things will go up. And as you know, the Nasdaq went up strongly until year 2000, then it collapsed. Then we had a housing bubble in the US, and then it collapsed. Then we had a commodities bubble in 2008, and then it collapsed. And lately we had again an asset bubble in everything, in high-end properties, in the US, in the UK, Hong Kong, Singapore, and so forth. And now these prices are also easing. We have a bubble maybe in the art market, as we've seen here in Hong Kong.
Yeah.
So you understand, the issue here is really, have central banks essentially done anything correctly for the economy of the typical household, for the average person, or have they just boosted asset prices which benefit the asset holders? In the US, most people don't have any assets, you understand? So they have not benefited from that, and so the income inequality increases and the wealth inequality increases, and you have all kinds of then people that come up and say, we need to have wealth taxes on the rich, and so forth. So my view is actually there are some inflationary pressures. You will see that insurance premiums will go up because the insurance companies at zero interest rates have no investment income to speak of unless stocks go up substantially. But otherwise they'll increase rates. And taxes will go up. And on your savings, you pay a tax. On your savings, you have no income any longer because you get zero interest from the banks.
Well, you know, what happens if interest rates go up? So they start going up. Do we get treasury yields at 3%? Then do insurance companies make more spread? Do you get more money back from the government? What happens?
Well, that is a big question. I don't believe the Fed will increase interest rates this year because the economy is weakening. Now, there are two events which may lead to the Fed increasing rates. Either the economy picks up dramatically, which I do not expect. I think the economy is actually much weaker than the employment figures would suggest. And number two, because of the strong dollar, the Fed will be very reluctant to increase interest rates at the time you have essentially massive easing in Japan, in Europe, and elsewhere. They don't want a stronger dollar because a very strong dollar is rather negative for the U.S. economy.
It's not the job of the Fed to protect the bottom line of GE, though.
I beg your pardon?
It's not the job of the Fed to protect the profits of companies like GE.
Well, it's not the job of the Fed to push up the stock market, to boost the housing market, or try. They haven't boosted the housing market, but they tried. They certainly boosted the housing market in the Hamptons and luxury in New York. Right. The rest maybe not. In Newport Beach, they also boosted the market.
And here in Hong Kong, too, by the way.
Yeah, and they boosted the income of parasites of society, such as Marc Faber, who are in the financial sector. That they've done very well at. Thank you very much, Ms. Yellen and Mr. Bernanke. But for the ordinary people, as an economist, I can't say thank you to them.
Can you give me a laugh, a Marc Faber laugh, as we finish off this segment?
That is so eerie on so many levels.
When I think of central banks, I don't think there's much to laugh about. It's actually tragic that the whole world now is paying attention to a group of professors and academics that hardly worked ever in their lives, and one word will trigger a market move, the word patience. Isn't that ridiculous?